Good morning, everyone. Welcome to our sort of bonus compliance seminar this month. Somebody already asked a question, what time does the seminar start? It starts at 11, so here we are, and we will dive into this. For those of you who, I think most people on here know me, but for those of you who don't, I'm Ann Lavelle. I'm the compliance specialist for CTR. I spent the first almost 25 years of my career as a partner in a large downtown law firm, working in labor and employment management side. So that meant employees or employers only. We defended them from all sorts of things and helped provide education and different things. I retired from that, but I love the educational component. So here we are. This does qualify for 1 hour of SHRM credit, and we will send this out to you. So you'll have the code as well as all of the slides after this. Just give us a little bit of time to do that. I'm joined by my colleague today, Vince, who's a payroll specialist. So we're glad to have additional expertise here on this webinar. If you're interested in these webinars or you need SHRM credit, again, we typically do these compliance seminars or webinars the second Thursday of every month. So always feel free to join us. You're welcome. We record these. So there's also a recording if you aren't able to stay the whole time. Our agenda today, as I do with any of these, first, please feel free to ask questions at any time. Just put it in the Q&A and I will try to answer them as we get them. If we end up getting too many, I might postpone them to the end, but we'll stay long enough to try to answer everybody's questions. It'll make it a better learning experience for everybody if we get questions, so that's great. I also, at every compliance webinar, include any little legislative or court updates that might be particularly relevant to everyone. And we've got a little update today about ICE, so we will talk about that very briefly before we dive into everything else. You can sort of see the agenda there. This is what CTR offers. A lot of you are already clients, so you already know this, but in case you need a refresher or want to know who we are, this is what we offer. And like I said, we do offer compliance webinars with SHRM credit once a month, second Thursday of the month, typically. And the next one we are offering is July 10th. And it is the changes to the Pittsburgh Sick Days Act. So some of you may have heard this already. It has expanded in terms of breadth and depth, how you accumulate hours, how you accrue them, who can, different things like that. So this isn't just for employers who are located in the city of Pittsburgh. And that's a really, really important thing to note. This webinar that's coming up in July, hard to believe, we might almost be in July, will cover any employer who has employees working within the city of Pittsburgh. So just because you're out in Butler or Washington County, this may still be for you if you have employees that work in the city of Pittsburgh, because it's where the employee works, not where you're located. All right. So first, the little update. And again, like last month, we covered some Supreme Court cases before we dove into the meat of what we're here to talk about. But ICE, which is the immigration authorities, has been really busy. And I'm not talking about the quote unquote roundups or raids or whatever we want to call them. They have been busy fining employers for failure to have appropriate I-9s when they inspect the I-9 file. What is the I-9 file? Hopefully it's just your I-9. You really should not combine that with everything else under the sun that's in the HR file itself, because they have a right to look at the I-9 file, which hopefully is limited to the I-9 and the supporting documentation. So what has happened out in Denver in the last week or so is good old ICE investigated 3 different employers, and the employers didn't have very good I-9 files or I-9 documentation. And there was a real question as to whether or not they had folks who legitimately could work in the US. A lot of the issues ICE had were lack of social security numbers or mismatches. One employer had 87 employees that fell into that category. That's a lot. That's more than one little like oopsie doodle. So in any event, ICE has issued a fine that's over $6 million for the one company alone, and the other two companies got smaller fines that were about $1 million and about $250,000. Something to be aware of, that ICE is advertising that they're out there doing this and fining employers. So you may have concerns or not concerns about raids, but just make sure your I-9 paperwork is up to snuff. And if ICE shows up that you don't have this type of problem where you're missing social security numbers, you have mismatches, or don't have documentation. Okay, we'll get off the ICE issue and let's jump into the big, beautiful bill. I have to admit that I love the name of this. I'm not here, though, to debate the merit of the bill. We really do try to stay apolitical in all things. I'm not here to discuss the full contents of the bill. We're here to just talk about a very limited subset of the bill, and that's how it affects no federal income tax on overtime or tips. And we're going to dive into that. And really, I think the most important thing to most people on this call is going to be our last two slides when we talk about how this affects you as an employer from a competitive advantage or a non-competitive advantage in the workplace. So let's go some of the basics here, which you may have already read about in the news, but I want to make sure we're all on the same playing field and have the same information. So what taxes are we talking about? That's the first thing. We all want to make sure we're on the right page here. It's only federal income tax. It's not the Social Security and Medicare taxes. They still apply. That applies to tips and the overtime. And by the way, when we talk about overtime, and this is really important, what we're talking about is the premium portion of the overtime. So most of you, I am certain, are familiar with how overtime is calculated. It's time and a half based on the regular rate of pay. So if my regular rate of pay, and to keep the math simple for yours truly, is $10 an hour, then for any hour worked in excess of 40 hours, I get time and a half, which is 15. We're not talking about no federal income tax on the full $15. We're talking about no federal income tax on the premium, which is the $5 portion of that overtime. So a lot of your employees may not understand that and may be very excited, and their excitement may be good, but it may not be quite as beneficial as they think it's about to be. The tips, and we'll talk about what tips qualify later, there are limits on that as well. And of course, state and local taxes apply. This big, beautiful bill does not change that at all. All right, what tax years does this apply to? It's a short-term provision. So it applies only from 2025 to 2028. It has a sunset at the end of the year, 2028. I do want to point out one thing, though, from a legal perspective. We're talking about the big, beautiful bill having a sunset provision. Prior to the big, beautiful bill being introduced, and I really can't say that enough. I just love that big, beautiful bill wording there. The Senate passed its own bill, has nothing to do with the big, beautiful bill, eliminating federal income tax on tips, and sent it over to the House for consideration. So we have a separate moving part here that's separate and apart from the big, beautiful bill that was sent over. So that bill does not have a sunset. If that bill goes anywhere in the House, and right at the moment there appears to be bipartisan support, miracles do happen, for the idea of no tax on tips and the overtime premium, then we may see the sunset be removed. It's hard to know on that. We did get a question. This is a great question. Thank you for asking it. It said, as far as premium pay, does that include prevailing wage? So some employers have to, especially like federal contractors, have to pay a prevailing wage. That is different than overtime. So prevailing wage is not the same thing as the overtime premium. That's not what we're talking about. The prevailing wage would go into calculating, right? That would be your regular rate, presumably. So maybe it's $20 instead of 10. And that would go into calculating the overtime premium is going to be more because the prevailing wage presumably is more, but that's not the same thing as the overtime premium. So great question there. All right, who's eligible? We're not completely sure. Is that a surprise with the federal government that we might not have an absolute answer, but we've got some idea. So the House and the Senate, okay, somebody else asked a question that's apropos here. So somebody asked, does the separate Senate bill address overtime, or is it just no federal tax on tips? It's only on tips. They did not. So the separate Senate bill that's completely separate and apart from the big, beautiful bill only address tips, not overtime. So great question. Thank you for allowing me to clarify that. And please, again, keep these questions coming because they'll be a better learning experience for everybody. All right. So both the House and Senate support the no tax on overtime and tips, again, overtime premium. But they have different ideas as to how this should happen, but they're similar. They're very similar. Okay, somebody is asking me to speak up and saying that they're having tough time hearing me. I am not aware of a separate number. I'm a technical jinx, okay? I'm just going to admit that flat out. I'm lucky I don't break my computer every time I open it. I don't know if anybody else is having problems hearing me. I'm going to try to speak up. I'm usually not accused of being quiet, especially around my own house. That's a different story. We are recording this, so if you cannot hear me for some reason or you have any issues, we will have a recording of this that hopefully will capture my voice better if you're having, okay, somebody else is saying the audio is fine. Thank you for that feedback. I will try to talk a little louder. Hopefully I'm not screeching at people, but we'll also have this recorded if you have any difficulties. Okay, let me just catch up here. All right, somebody suggesting maybe turn up their speakers. All right, let's dive back in here. So some action items for you. And one of these is a little challenging perhaps, because remember, this tax bill covers the entire 2025 year. Where are we right now? We are in a heat wave. It is summer. We already have 6 months of the year behind us, but we're responsible for that 6 months, even though we didn't know the big, beautiful bill was coming. So we're still responsible for reporting and withholding. We're going to, only the tips and the overtime premium are eligible for this sort of tax break. But let's break that down a second here. So we all know employees should do certain things that they don't necessarily do. And that includes telling us what tips they may have gotten. Sometimes it's easy to tell. Sometimes if somebody's handing them cash at the restaurant table, you have very little control over whether or not they're accurately reporting things. So what if you have an employee who has not been accurately reporting? How does this affect them? And by reporting, I'm talking about tips. Obviously, the overtime, that's us. We should know about it. We should have good records on that. Will this new rule benefit them? Will they all of a sudden, because it's only tips that are reported that are eligible for this tax break. What if the employee hasn't been reporting tips? It's illegal, but it happens. Will they see this new rule as a benefit or a burden? Keep in mind, if I'm the employee and I haven't been reporting tips, shame on me, it's illegal, right? But it's also reality. Will I all of a sudden start reporting tips? My tips will have gone from X amount to 3 times X. Does that expose me to an audit? And also, if I haven't been reporting tips, I haven't been taxed on them, not only from the federal income tax perspective, but I haven't been taxed on them from a state or local or anything else perspective, right? And I may not be incentivized to report my tips because of those issues. Maybe I will be, maybe I won't be, but I think it's worth considering employee reaction to this, and also considering, will we see employees all of a sudden with so much more tip money than they've ever reported before in their lives? That could be an issue too, from an audit or other perspective. So I think that's something to be cognizant of, that if you think you have employees who may have been less than honest about reporting tips, how they may react to this. And again, I think employee knowledge is an issue here. A lot of people hear no tax on tips or overtime. That's how it's portrayed in the news. They don't drill down to understand that, yes, I'm still getting taxed on these. It's just not the federal income tax. It's only reported tips. It's not like I all of a sudden have some total freebie here. There is still taxation. And so you could get employees who all of a sudden start reporting more and are shocked to learn that, hey, yeah, you didn't get federal income tax on these, but you actually got taxed from the state and local level. And so you weren't reporting before, but now you are. And so you're actually earning less because you're getting hit with the state and local taxes, and they didn't understand that. So I think employee education here, particularly if you're in a tipped industry, is going to be key, so that the employees understand this isn't some sort of freebie from all taxes. Okay, another question here, and I love questions, so thank you. I was going to get to this, but let me answer this because it goes with my next bolded statement here. The question is the OT, if the OT is retroactive for the full year, what do employers do to adjust the employees who are no longer with the organization? That's a wonderful question. And I don't know that you are responsible for adjusting that, right? It's them meaning the employees, who, when they file at the end of the year, should be filing and claiming the deduction. So I think that's going to be on them. But the question as to, is this retroactive for the entire 2025 year? As the big, beautiful bill is drafted right now, yes, it is. It goes back to January 1 of 2025. And that brings us to the one issue, and we should be able to pull this together, but it's worth thinking about. The government has indicated that employers are likely going to be required to identify the overtime and tips separately on the W-2. So we may get a different W-2 or a different form, and you're going to have to say, hey, Lavelle earned this much as a regular rate for 50 hours. Because remember, the regular rate would apply to that 10 hours of overtime, my $10, and then $5 of overtime premium for that, 10 hours. So I got $50 overtime premium for my 10 hours of working overtime. So we should be prepared to slice and dice what we have paid so that the government can see that on the W-2. Somebody else asked, has the big, beautiful bill actually passed yet? So where it is right now, no, it hasn't been signed by President Trump yet. And that would signify official passing, blessing, whatever. We have, and we'll talk about this a little bit more, we have a House version of the bill. We have a Senate version of the bill, which is typical in these budget type schemes, where, the House passes X and the Senate passes Y, and then they sort of have to negotiate and come up with what they agree about. So they sort of negotiate whatever. That's where we're at right at the moment. The reason I think this is critical, even though we don't have President Trump's signature on it yet, is both the House and the Senate are on board with this idea. And of course, President Trump is, because this was one of his campaign promises of no tax on overtime and tips. This looks like, this is not a situation where we have the House saying yes and the Senate saying no. We have both of them saying yes, with slight differences on how this is going to be applied. So I think you're going to see this. The differences, and we'll get into that, have to do with who qualifies for this when you get into the really high income brackets, which will only affect far and few employees from a tip perspective, at least. Okay, we're getting lots of questions here. All right, so somebody asked, and I want to clarify this because I'm not sure I understand the question. Do you have to reimburse the overtime premium back to January 1st or only if the employee asked? We're not reimbursing anything. So whatever the overtime premium was and whatever taxes we took out, maybe you're thinking of reimbursing the taxes. There's nothing that says to us we must reimburse those taxes. I think the employee on their tax return, if they benefit from this rule, and we'll talk about who benefits and who doesn't, because not everybody is going to benefit from this rule because some people don't earn enough to pay taxes in the first place. We're not reimbursing anything, but we are looking back to January 1st and saying, what have we done? What have we paid? Can we parse it out so that we can show the government who we paid what in terms of premium or tips? Okay, somebody is asking a complicated question about, and I don't deal with the CTR payroll. I'm going to hold off on one question till later, and we'll address that. Okay, so we have to know what we're doing and how we're doing it because we're going to have to report it. Does this help anyone? So we sure hope it does, right? However, looking at this realistically, and if we look at different sources, and I try to look at both conservative and liberal sources, depending on who you look at, 25 to 40% of tipped employees don't earn enough to pay federal income tax in the first place. Because the standard deduction wipes out sort of the first 15,000 of income for a single filer and 30,000 for couples. And even if you're over those thresholds, right, whether you're tipped or overtime, there's certain deductions you can take that will further reduce your tax liability, such as the child tax credit, which is a really common one. And you may have an employee who wouldn't owe or be liable for federal income tax in the first place because they either earn too little or they have enough deductions to take them way down. So this is not going to help the very lowest of wage earners. If the person is eligible, so they're earning enough and they don't have enough deductions that takes them to zero or close to zero liability from a federal income tax perspective, then depending on the source you look at, the extra money in their pocket, so to speak, will be between $1,400 and $2,000 on average. So really depends. We're not going to help our lowest wage earners with this. But there is a subset of what people think are primarily middle-class folks that will benefit from this. Something really critical here, the horizontal equity issue. So this is a conundrum, and it goes to the strategy that you might want to consider behind some of this. And that is when we talk about horizontal equity, we're going to say, hey, we've got Ann, and I'm going to pick on Vince since he's my colleague and he's with me. And Ann and Vince earn the same amount of money. But because one is exempt and one is non-exempt, one of them will end up with an extra, let's say $1,500 in their pocket at the end of the year, and the other won't, simply because of how they're paid and how they're classified. And that's an issue that comes down to employee morale, recruitment, if you're looking for folks, competition for employees. If I earn $40,000 and Vince earns $40,000, but I'm considered non-exempt, I'm going to be like, woohoo, I got an extra, $1,500, and Vince may not take kindly to that because he's like, well, hey, you guys are the ones who classified me as exempt. I'd like to be classified as non-exempt, and I really would like to do something else here. we'll talk about whether we can reclassify people, because that is something to consider here. But you're going to have a horizontal equity issue. That's not discrimination, right? A lot of people hear equity issue and think discrimination or something along those lines. This isn't discrimination, at least it doesn't appear that on the surface, even though I'm female and Vince isn't, but it is an equity and a morale issue that we have this going on, and that we might both be working just as hard. And Vince, as the exempt employee, may be putting in more hours because he's salaried exempt and meets the duties test, he's not getting the break. So something to consider. All right, let's look at tips a second. So when we look at tips, the first thing we need to do is define what a tip is. Most people are like, oh, I know what a tip is. I don't need to define this, but the law defines it differently than a lot of people see it. So a tip is something that I leave as a customer to somebody that I'm not required to do so, right? There's nothing that forces me at the family restaurant to put, $10 down on the table in cash or add it to my credit card when I check out for my server. I'm kind of a heel if I don't, but I'm not required to. That is very different than service charges, or some restaurants say, hey, if you're a party of X, if you have a party of 100 people, we're adding a tip, or we're adding this or that, or the service charge. That is not what the government views. A service charge is not the same thing as a tip. I've also seen out, particularly on the West Coast, cost of living charges that are added to bills because it's so expensive out there. That's not a tip either. So when I pay that, it's an automatic thing that goes on my bill. And we really, under other laws, should be defining for the customer that that is a service charge of some type, whether it's cost of living or because my party's so large or whatever it is that's going on. That ought to be defined, and note that it is not the same thing as a tip to the server or gratuity. And that service charge, etc., is not a tip that is somehow exempt from the overtime, or I'm sorry, the tip income deduction. So very important that we first define what a tip is. Looks like I'm getting some more questions here. I'm going to try to get to everybody here without completely losing my train of thought, because shiny objects and stuff can do it for me. So we have to be cognizant of that. Okay, so somebody's asking, I think this exact question, do tips automatically added to a check count? So it, again, that looks more like a service charge. If I say, hey, your party of, if you have a party of 8 or more, we're automatically adding something. You're probably going to have a problem with that not counting as a tip, even if you call it one. But certainly if you call it a service charge or a cost of living charge, for sure, you have a problem with that. All right. The big, beautiful bill, though, says they're going to provide some meat to the bones here, because there are questions. Who's a tipped employee? We've had problems since the dawn of time answering that question to begin with under the Fair Labor Standards Act. And this is not an FLSA seminar. I wouldn't want to make everybody go crazy talking about both the big, beautiful bill and the FLSA. But what we do know is under the big, beautiful bill, it provides a provision that says, hey, within 90 days of the official passage of this, that means Trump signing it, the government, one of its agencies, is going to define who a tipped employee is. So we hope that they'll put extra meat on the bones too, that fleshes out some of the issues of like the automatic gratuity. Maybe there will be a separation between a service charge and an automatic gratuity. I don't know about that though. But hopefully we'll define who a tipped employee is. We know that the intent is that it will be individuals from commonly tipped positions. So the one that comes to mind for everybody, right, is your server at the family restaurant. or the fine dining establishment. I have kids. I don't go to fine dining. But that one comes to mind for everybody. I had my nails done yesterday. To me, that is a tipped position, is the salon technician who did my nails. Whether the government agrees with that, I don't know. What about the busboy? Is that a tip position, particularly if we're pulling tips? Does that person qualify? That's a bit of a question mark right at the moment, because lots of employers pull tips. And again, you shouldn't have managers in the pool, so that's a different FLSA issue. But you shouldn't have, assuming you have a legitimate tip pool, does the bus boy or bus girl, do they get the break? Not sure on that answer, but within 90 days, and again, let's assume the big beautiful bill, just to give us a date, is signed July 1st. 90 days puts us at the end of September to figure out who the tipped employees are. And again, some are automatic. The servers at restaurants cannot imagine that they will not be tipped employees. But some of the other peripheral folks, I don't know, because right now they might not even qualify as tipped employees under the FLSA. So some people, when this was first announced, and again, people listen to no tax on tips or OT and don't drill down, they're like, hey, we'll just make a lot of people tipped employees. It'll all work out. It'll benefit them. It'll benefit us. Life will be great. It doesn't work that way. So any idea that you hear, and overtime's a little different, but any idea that you hear that we're going to reshuffle everyone from non-tipped to tipped employees, and I've heard this particularly with respect to folks like the bus boy or someone like that, that is just, you're not going to get the benefit you think you might get, because first of all, I don't know that they're going to fall into the government's definition of a tipped employee. And secondly, this has a sunset in 2028. So if you reshuffle now, you may have to unshuffle in 2028 unless that Senate bill that's separate and apart gets passed that doesn't have the sunset. And you need to keep in mind, if you do reshuffle people, which probably is not the best idea, but let's say you do it, are you going to pay them the sub minimum wage that a typical tipped employee would get paid? Some states don't permit this. We do. Federal law permits it. But again, if the state is more restrictive and doesn't permit a sub minimum wage, you always have to look at state and local law. And just because you pay somebody a tip does not mean that you can automatically pay them the sub minimum wage. Again, this isn't an FLSA seminar, but there are points that we look at to say, okay, if you pay a sub minimum wage, they better be performing duties of a tipped employee. And again, that's why since the dawn of time, we haven't always been able to figure out who's tipped or not tipped. But we need to take all that into consideration before we have some idea that we are going to reshuffle the whole entire world to be tipped or non-tipped employees. Moving along, if I can get my cursor over to change the screen. Here we go. This is really critical. And I think for those employers that want to be perhaps proactive, perhaps thinking, or perhaps you have really tough recruiting, retention, whatever it might be, here is where some thought can go into things, and you can't undo what you've already done. So whatever we've paid people through the beginning of the year, it is what it is. We don't go back and reinvent the wheel and say, oh, now we're making Ann non-exempt. She was exempt for the first 6 months. We're going to go back to January 1 and change that. But there is more potential for reshuffling positions here. And you're probably saying, why? And why would I want to? Well, there is a sunset to the OT provision, and the separate Senate bill does not change that at all. But what makes a person exempt? We have to look at that to understand why we could shuffle people if it provided us with a strategic business advantage and helped our employees at the same time. So what makes a person exempt? In its very basic sort of what you have to do, the person has to meet a duties test, and they have to be paid what we call the salary basis pass the salary basis test and the salary level test. So let's assume that I and Lavelle meet the duties test. Does that automatically make me exempt? No, it doesn't. I have to pass the other two salary tests. What if we decide to pay Ann Lavelle, who otherwise meets whatever duties test we're looking at under the FLSA, we decide to pay her hourly? What have I just done to Ann Lavelle? I'm now non-exempt, even though I meet the duties test. And a lot of employers mess this up, putting aside the big, beautiful bill or anything related to it. The most common example of how this works in real life are nurses. So if you look at healthcare organizations, the vast majority pay their nurses an hourly rate, even though the duties tests would be passed by all of the nurses, or virtually all of them, particularly at the BSN and RN levels. Why do we do that? It's just sort of the way healthcare has developed, that we pay an hourly rate. We turn these otherwise exempt employees who are nurses into non-exempt employees because they fail the salary level and salary basis test. We're paying them hourly. So we can make anyone who's exempt, non-exempt, regardless of their duties, if we make them fail the salary basis and the salary level test. Do we want to do that? That's a completely different answer. We might look at those positions that are on the fence to begin with, and everybody has those positions where you say, gosh, it's a close call as to whether Ann is exempt or not, because we exempted her under the administrative exemption, and that's quite a complicated exemption. And we're not 100% sure she qualifies anyway, but we're taking a chance. We may look at those positions and say, should we reclassify them, start paying them hourly? Does the fact that we pay them hourly, if we explain, it'll give them a tax break and help them earn overtime? Does that help our employees? Does it help with recruitment, retention, competition with other employers? Does it hurt us as the employer because now we will pay overtime? Would we set the hourly rate as something less than what her salary was equal to, because we're going to account for the fact that she will earn overtime? But that is something to think about. Again, we can't redo whatever we did in the first 6 months, 7 months of the year. But we can think about this strategically and say, if there is shuffling going on, if we want to do that, knowing that it is a short-term solution until 2028, does that make sense for any of our positions, particularly the ones that were borderline to begin with, as to whether or not they were exempt? It doesn't make sense for the CEO, right? We're not going to reshuffle the CEO and make him or her non-exempt. But those who are borderline, it might help with the horizontal equity issue that will be in play here. If we look at that and say, gosh, these folks that were borderline, and what if my competitor is doing that? I'm in the social services, human services type of job. It's really tough to get employees. We don't pay that well because we're limited by government funding or whatever it is. Is this a way to attract people to say, look, the way we're going to do it is, even though arguably this position could be exempt, we're making it non-exempt because of the way we pay you, not because of the duties. And therefore, the overtime premium will not be taxed at the federal level. Is that a bonus or isn't it? And what if your competitors start doing it? Those are things to think about from a strategic HR level as to what you might or might not want to do. Vince, I know you had one point on the FICA tax you wanted to bring up.
Yes, that's true.
I'm not sure I can hear Vince.
I'm sorry, I'm here.
Okay, I'm sorry, Vince, I can't hear you at least, so of course it could be me. That's all. I do have my completely up. But essentially, for the FICA tax issue, there may be additional deductions that employers who don't traditionally take that deduction can avail themselves of, I think is more or less where we're at. So, oh, great. Other people can hear them. I can't. I told you guys I was the technical jinx. I apologize, Vince. I'm going to shut up for a second.
Okay, can you hear me now? I changed the setting. Okay, so if you can hear me, the point is there's something called a FICA tip credit, and it's something that's largely overlooked by a lot of employers. Currently, it's available to food and beverage employers. And basically what this is, it's a tax credit for your annual income tax for the business. It's a credit that allows you to reduce your income by the Social Security and Medicare payments that you've made on tips that exceed what is needed to make an employee whole for minimum wage purposes. So basically, in Pennsylvania, if I have an employee who's being paid $283, but the minimum wage in Pennsylvania is $7.25, I have a $4.42 gap. The tips have to make the tips within an hour have to make up that $4.42. What if the person makes $20.42? Now the person has an extra $16. I, as the employer, I am still paying the Social Security and Medicare amounts on that extra $16, but I don't have control of those dollars, and that's where the FICA tip credit comes in. I can then claim a credit for the Social Security and Medicare amounts that I have paid as the employer, the matching amounts, and claim that as a credit on my federal income tax return. Now, currently, that's only available for food and beverage employers. The big beautiful bill is looking to expand that to hair, beauty, businesses, aesthetics, nail, and so forth. And so there would be an expansion beyond food and beverage. So that's something, again, is commonly missed by a lot of businesses. The other point that I feel that is important is that the no tax on tips or overtime does not affect how pay is withheld on a pay-by-pay basis. Those are going to be credits that the employee is going to be able to use when filing his or her tax return. It's what's called an above the line credit. So at the end of the year, probably what's going to happen is the W-2 will come out and it will specify this many dollars in tips or that many dollars in overtime. The employee, when filing the tax return, will be able to put that onto the tax return and take a credit there. It does not reduce withholding. It is possible that the W-4 form may have an extra line on it, just as it does now for exemptions, other income, additional deductions, and so forth, where an employee may be able to estimate what his or her overtime would be through the year and reduce withholding that way. But essentially, the no tax on tips and overtime does not affect the pay-by-pay withholding under the current plans within those bills. And I don't know if you can hear me, but that can come back to you now.
Okay. I don't want to interrupt. I'm trying to lip read over here. Vince, are you good? Or because I can't unfortunately hear anything. Okay, great. We had a couple questions come in, and I apologize for the technical glitches, and we can blame them on me because I actually have broken the CTR computer, but that's a different story. So we had a couple questions come in that I want to make sure we get to. So One person is asking a question that I think is probably better asked to your payroll person about how CTR is handling your particular account. So I will defer that question, but somebody else asked, do you see a problem with requiring employees to take their lunch break to avoid an automatic 30 to 60 minutes of overtime each day, with the understanding that they would be required to stop all work during their break time? So, can you make this rule? Yes, you can. Are there issues with it? Yes, you're already identifying one of the potential issues. So let's say you have a schedule where you really don't want to pay overtime. Now, if they work it, you pay it. If they have worked it in defiance of what you have said, if you said, hey, no work during lunchtime, and they have worked it, we pay it. If they did it in defiance of the rule that you set out, it may be a discipline issue, although I would look very carefully at that, because what if it was an emergency, whatever it might be. If we make the rule that everybody gets a 30 or 60-minute lunch break and we're not paying it, we absolutely positively must have a system for them to report to us when they do work, and we cannot retaliate for paying them. We can retaliate, not retaliate, we can discipline for a rule violation, but we can't retaliate against them for reporting the work. And there may be good reasons why they had to work through lunch. So yes, you can make this rule. It is fraught with issues, because the issue you get is you're not clear on who they should report to or how they should report if they actually work. And you get people who do really small little tasks. You know, somebody comes up and says, hey, Ann, I see you're eating your, nice little lunch there, but I just had a quick question. And it really is a quick question, and I answer it because I'm a good employee. I have technically just performed work during my lunch period, and I should get paid for that. And if I have performed work, let's say it's a 30-minute lunch period, breaks of less than 20 minutes are paid. So I could get into a situation where I'm answering a couple questions, and it turns out I don't have a 30-minute lunch break. I have a 10-minute break, which should be paid, and another 10-minute break, and a 5-minute break, or something like that. So yes, you can do that, but it is something you need to monitor like a hawk. There's lots of litigation out there about this when you have automatic lunch breaks and you don't monitor or provide a way for the person to report to you, hey, I actually did work. And even if it was an infinitesimally small amount, I checked my email, I checked my phone. Sally from shipping came up to me and asked where the missing labels were. And yes, it took me less than 10 seconds to answer her, but I worked. So something to think about. We've got a few more questions here. Is the credit on overtime just the premium portion? Yes. So this is the exact example. The example in this question is the exact example because my math skills could use some work, even with new math. So the question is, if the employee makes $10 an hour, that's known as their regular rate, and 15 in overtime, the credit is just on the $5 premium. Yes, it is not on the regular rate, even the portion of the regular rate that's being paid during the overtime hours. Okay, are bonuses addressed in the big, beautiful bill? No. So if we want to pay people, and this is strategic thinking too, so this is a really good point. If we want to perhaps provide people with the best outcome under the big, beautiful bill, and assuming we have folks that we think are actually eligible for this deduction, in other words, they're not such low wage earners or have so many deductions already that they're not even going to get the benefit of this, then we might want to say, hey, are the bonuses worth it? Or we would be better off funneling that money to them and paying for some more overtime for them to work. The other thing, I want to go back a couple slides because I think I didn't address the one slide. I think I got distracted with some questions. We're talking about, let's see if I can go back here. All right. So when we have folks that, that are approaching the limit, right? They have to have Social Security numbers. That's one of the things that is required under the big, beautiful bill, because we're not, with the current administration, in favor of immigrants receiving this, or illegal immigrants in our country. That's not where this bill is aimed for. So the Senate version starts out with a $25,000 max deduction. That is possible. Some people earn a ton of overtime. It is possible. But it starts phasing out when folks are at 150,000 in income, and then it fades out gradually. And if you're a single filer, when they hit 250,000 in income, it's gone. The House bill, and again, they both agree this should happen. It's just slightly different. And the difference is when you start reaching the cap of the top wage earners. This House bill said, hey, anybody over 160,000 earns too much, they're not going to get this tax break at all. The number of employees who are tipped or overtime who are earning that much is far and few between in either scenario. So it is possible, but this is going to be a really small subsection here of folks. But one thing I want to point out is employees are disincentivized to work more overtime when they get close to these caps. So we do want to be aware of that as well, that there is a disincentive at some point under this bill for folks to work more. Let me check to see if we have any last minute questions here. Otherwise, we will be holding the July seminar on the City of Pittsburgh changes to their paid sick leave law, which will take effect in 2026. Okay, I'm not seeing any additional questions. I really appreciate everybody's attention. I hope this was useful. Again, we do send out the slides, the SHRM code, etc. The people who work that magic are not me. Again, I'm not allowed to touch technology. Both of them are on vacation. So it may be early next week till this gets out to you. But in the meantime, if you need anything, of course, reach out to your representative. And I hope everybody stays cool in this weather here. It's a scorcher. Take care, everyone.